Picture this. You buy a duplex in Montreal, you live in the lower unit, rent out the upper one, and life goes on. Years later, you decide to stop renting and turn the whole place into your family home. No sale, no money in your pocket, yet suddenly the CRA says you owe tax on the deemed sale of half of your house. That's exactly what happened to John Locke Gauthier, and his case shows a simple change of use can turn into a tax headache, or if handled properly, a tax deferred opportunity. Hi everyone, I'm Amandeep Singh, CPA and founder of Clarified CPAs here in Burnaby. Let's walk through this story and see how the court made sense of it and what lessons you can take if you own a rental, suite, or a mixed-use property. Back in 2008, Mr. Gauthier bought a duplex. He lived in the lower unit and rented the upper unit. For almost half a decade, that rental income helped cover the mortgage, a common setup for many homeowners. Then in 2017, he decided to stop renting. He renovated the duplex into a single family home and moved his family upstairs. That move triggered what the tax rules call a change of use, switching from rental income use to personal residence use. Under the Income Tax Act, when part of the property stops earning income, it's treated as if you sold and repurchased that portion at fair market value, and that's the deemed disposition. Any increase in value becomes a capital gain, and half of it, unfortunately, becomes taxable. Mr. Gauthier filed his 2017 return and, not realizing that there was a way to defer, reported the capital gain on the upstairs unit. The CRA assessed him exactly as filed. A few months later, after learning about subsection 45(3), he filed a notice of objection to make the election that would let him defer the gain until he actually sells the home. But the CRA refused. Their position was that election only applies when the entire property changes from income use to personal use, not just a part of it. And because the duplex had always been partly his home and partly rental, they said that just does not qualify. So the question before the tax court of Canada was simple. Can an owner make the 45 subsection 3 election when only a part of the property, like one rental unit in a duplex, changes to personal use? Judge Gaston looked carefully at how Section 45 was written in 2017. The text wasn't crystal clear. They spoke of the property acquired for the purposes of gaining or producing income that ceases to be used for that purpose. Now, at first glance, that might sound like it applies only to a property used entirely for income, not partly. But the judge stepped back and looked at the bigger picture. He noted that Section 45 already recognizes partial changes of use elsewhere. For example, when someone increases or decreases percentage of rental versus personal use. If Parliament had meant to exclude partial changes from subsection 45(3), it would also have said so directly. He also looked at the purpose behind the rule. It was designed in 1985 so that homeowners would not face tax just because they decided to move into their rental property before selling it. Nothing in that purpose suggests that half a house should be treated differently from a whole house. And practically speaking, once Mr. Gauthier stopped renting the upper unit, he was no longer earning any rental income. So in every real sense, he had stopped using that part to earn income. The judge concluded that even before the 2019 amendment, which later clarified the wording, subsection 45(3) already allowed for the election for partial changes of use. So the court allowed this appeal. His 2017 assessment was sent back to the CRA to be reassessed with the deferred gain, meaning he did not have to pay tax until he actually sells the property. Now, what's the takeaway for homeowners and landlords? If you ever convert a rental suite or a basement apartment back to personal use, or the reverse, it's vital to understand when a change of use happens and what elections can protect you. A simple missed election can create thousands of dollars of unexpected tax on a gain you haven't even realized in cash. And once the filing due date passes, fixing it can be difficult, unfortunately. That's where planning helps. At Cloudiver CPAs in Burnaby, we guide property owners through these decisions, explaining the forms, deadlines, and cash flow impact in plain language. Think of us as Google Maps for your tax journey, showing the clear route, warning you about detours, and helping you reach your destination without surprises. Thanks for watching, and I'll see you in my next video. Until then, bye.